Boa tarde a todos. Nós estamos aqui para dar início à sessão com o professor Robert Guttmann, intitulada Multipolar Capitalism, the End of the Dollar Standard. I will start presenting Professor Robert Guttmann very shortly. He's an economist has been based on New York City and Paris. He teaches economics at Hofstra University, and now he's a professor emérite at University of Sorbonne, Paris Nord. He has a huge production on themes related to macroeconomics, monetary and financial issues, international issues. He gives us a broad comprehension of the dynamics of the capitalist economies. And I can tell you from what I have experienced and also seen from Professor Guttmann that he's not a great professor, a great researcher, but a true scholar. And we can see that from his relation to all people who is around him, mainly his supervisors. That's very nice to have you here, Professor Guttmann, once again. We are very glad to have you here. I'd like to thank your presence, the presence of our students. We have a lot of students here in presence. We have also audience from YouTube, and we are very, very, very glad to have you here. So, Professor, the floor is yours.
Thank you, Ana Rosa, especially for those very warm words. I am very grateful to have been invited and give you a bit of a presentation of my latest work, which is called Multipolar Capitalism, the End of the Dollar Standard, which just came out a couple of months ago with Palgrave Macmillan. And I mean, many people have predicted the end of the dollar standard for a long time. And it's then, you know, people say, well, who's going to replace the dollar? Well, there's no evident replacement, you know. Okay, so I'm trying to approach this question quite differently than the many contributions or arguments that I've seen. I'm trying to put it into kind of an historical context and explain also what I mean by the end of the dollar standard, which has a particular meaning in my own thinking. And my own thinking is very much shaped by the idea of long waves from Nikolai Kondratiev in the 1920s. Where you see capitalism's long-term evolution in terms of these 40 to 60 year long cycles, where you have 20, 25 years of rapid growth. Usually in that period, you have massive spurts of globalization as you had towards the late 19th century, let's say from 1879 to 1914, or whether you had another spurt of globalization within that upswing of a long wave. After the war, the post-war boom from 1947, let's say, to 1973. And then you also had a third, you know, long wave with a third spurt of globalization from the mid-80s onwards to the great financial crisis of 2007. But these rapid growth periods, these globalization-driven booms, and typically in major financial crises, as did in 1873 to 1879, and then again, you know, following World War I into the 20s, all the way up to the stock market crash, Great Depression. There's a lot of financial instability in that period. And then you also had the stagflation crisis ending the post-war boom in the 1970s, early 1980s. And you also have finally, fourthly, the current period, which, you know, from the great financial crisis of 2007, 2008 onwards, all the way through the great pandemic into the current stagflation scenario that we see unfolding right now in front of our eyes, right? So you have periods of very strong growth, globalization spurts, and then you have periods of crisis, stagnation, deflationary pressures. And one of the motivations for this is to clarify a little bit more the theoretical framework to which I belong, which is the French theory of regulation. And the other one is to also, realize that if my theory or this theoretical interpretation of the long waves holds, then we are in a very, very interesting moment right now, right? And so I want to highlight that interesting moment right now, and that's basically what I was trying to do in the book, right? In the book, I spend a lot of time explaining the theory de la régulation, to which I belong. In the long wave context, there's the Schumpeterian dimension of technological change, there's the financial instability dimension of Hyman Minsky, and then there's also, the regulation theory, which tries to put all those things together, and also provide a kind of an institutional framework to explain those long waves in terms of accumulation regimes. And each of these accumulation regimes, we have a competitive accumulation regime in the 19th century, we have a monopolistic accumulation regime in the late 19th century into all the way to World War II. We have a Fordist accumulation regime in the post-war period through the stagflation crisis. We have a finance-led accumulation regime that starts coming out of the 1980s with the Reagan Revolution, Reaganomics. And then, deregulation of finance, which reestablishes the dollar standard, right? The dollar standard moves from Bretton Woods to a pure credit money standard in that deregulation, and so you have a decisive role for the international monetary system, right? In those accumulation regimes, right? In the theory of regulation, you have basically an institutional framework for capitalism, right? And the institutional framework gets created through crises, in the wake of crisis. And the institutional frameworks, let's call them the 5 institutional pillars of capitalism, is on the one hand, of course, the wage relation, wage-labor nexus, which is not only just the wage, but the social wage, income maintenance programs, labor market, discrimination practices, and so forth. Then you have a second institutional pillar, which is money, and it's linked to credit, debt, it's linked to finance and the financial system. You have a third institutional pillar, which is the forms of competition, between firms and also between other stakeholders in the economy. And then you have a fourth pillar, which is the role of the state in increasing the mixed economy, the forms of state intervention, managing the economy, managing society, managing the environment. And then you have the international dimensions, right? And the international dimension, centrally around the international dimension is the international monetary system that's prevailing, right? And what happens with those long waves in terms of accumulation regimes is that you get in certain moments, typically after a long period of crisis, you get institutional reforms and a complementarity between those institutional reforms that allow this spurt of growth, this long boom, this globalization drive, right? As we had in the late 19th century, as we had in the post-war boom, as we had in the what Americans called the Great Moderation, that is, this period from late 1980s all the way to 2007. So you have an institutional framework, right, with a complementarity between those 5 institutional pillars that works, right? But they get destroyed by the internal contradictory accumulation logic of capitalism, and so crucial here is how this international monetary system works, right? That to me has always been very interesting. And there's an international dimension to the capitalist system. It has its kind of propagandistic expansionist tendencies, right? And they get very much shaped by the international cross-border space of monetary circuits, right? So I'm a heterodox economist. I believe that money is not an exogenous stock variable, but an endogenous flow variable. And it flows through these interdependent monetary circuits. That's a very Marxist framework. But incidentally, it's also a framework that Keynes approved of I saw a while ago a letter that Keynes wrote to Dennis Robertson, where he said Marx is pretty useless, but his monetary circuits are an interesting idea, something like that. But there is this international space for these monetary circuits, right? Whether it's CMC, which is exchange, that's trade, whether it's MC, prime, M prime, which is the production process. And that, of course, is increasingly globalized, or was until recently increasingly globalized with global supply chains. And MM prime is finance, right? And so there's this international dimension, and the international dimension gives you different monetary spaces. And so there has to be some kind of institutional construct, the international monetary system, that structures the fact that we have national monetary spaces, but internationally organized transactions, right? So what that international monetary system does then, it has to provide for a smooth, integrated, spatially and temporally integrated provision of these circuits across borders. And for that, you have to have internationally accepted medium of exchange, the different world money forms. You have to have also the management of the currency prices for the exchange of currencies. So there you have, and there are different practices and different alternatives for how to manage exchange rates. You have like a whole spectrum of different regimes, from free float all the way to currency board. And so we have a hierarchy of exchange rate regimes. We have, with those exchange rate regimes, we have practices of convertibility. Yeah? The dollar is, for example, very differently convertible than the renminbi, and that has to do with different control mechanisms that are in place in US type capitalism versus Chinese type capitalism. So there's convertibility practices, and then you have cross-border payment system. That's the plumbing system of global finance. That's the plumbing system of the international monetary system. It's usually something we do not pay a lot of attention to, but it is very important, especially when it doesn't function well, to understand it. And the plumbing is basically at the heart of the monetary regime. Right? It is how we make payments. And there's a dramatic and important evolution of money and its linkage to credit and its linkage to the financial system that manifests itself technically in this idea of the payment system, right? For example, in the dollar standard, you no longer have an official payment system that you had in Bretton Woods, but you had a private global banking system, the euro currency system, which ultimately became known as offshore banking, that established itself in the late 60s and then basically allowed a parallel banking system, a globally transnational banking system that was parallel to the central bank controlled public payment system, but at the same time also competed with the domestically enclosed financial system of these respective countries. So you have a third force, and that's what made finance the dominant force in the finance-led capitalist period, right, of the dollar standard. I don't know whether I'm making too much sense, but I want to make sense in the sense that the payment system is crucial, but very often not much analyzed. It's taken for granted. It's like having the pipes in a bathroom behind the wall that allows you to put water into your bathtub and take the water out. You take it for granted, right? But it's an incredibly complex system. So, and I'm also talking about this now with added emphasis because we are moving to digital money. And that's a very different type of money form, right? But before I go there, let me also emphasize that the international monetary system, the way it's structured, or has been structured consecutively through different iterations of the international monetary system, is always also a hierarchical pyramid of power relations. And of course, power relations most dramatically between countries. But not only, there's also the relationship in finance and industry, finance and commerce, the mobility of people, all of this is part of it. Okay, so we have this international monetary system built usually around a superpower, a hegemon. Okay, and this hegemonic role of money is already tied to the very origins of money, with the bimetallic standard of the pharaonic dynasty in Egypt, or forms of coins, the importance of coins in the power of Athens, the Greek Empire, or the Roman Empire. And so this is not a new thing, right? Money and power are very connected, especially with the state symbol connecting the two. So saying that, we've had of course, Britain in the 19th century, the US establishing itself as the superpower in 1945 after World War II, through the Bretton Woods system and then through the dollar standard. And what's interesting now is that we will have an economy, a multipolar economy, that is not shaped by the role of the hegemon in terms of setting the rules of the game for the internet, for the world economy, and also providing the money supply distribution as well as the liquidity provisions for the monetary circuits across the globe to work well, right? We won't have that. We will have alternative power centers, and they will so mostly, in my view, the US, the European Union, and China, further differentiated by regional centers like Brazil or South Africa or the Arab Gulf states, or India, and so or Russia, for all we know. But so you're gonna have a multipolar economy with a triadic structure of central powers that have large zones of influence and that use their own currency for that zone of influence, right? And so this is going to be a very different type of capitalism, not least because each of these power centers have distinctly different visions of capitalism and these very, very different notions of the role of the state in this. And so they're going to be variants of capitalism also, right? And so that's what I mean by the end of the dollar standard. I mean by the end of the dollar standard that we're going from a hierarchically structured world to a multipolar configuration world, right? And where the variants of capitalism are crucially important, right? But one of the things that's happening, and I'm going to go back to this multipolar configuration later in my subsequent slides, but as I already indicated to you, one of the things that's important about studying money as this institutional pillar of the mode de régulation of an accumulation regime within the context of regulation theory that I follow, when you study money, the money form is crucial. The money form gives you not only its social representation and therefore an aspect of informal power by its general acceptability, but the money form also is decisively important for the kind of payment system you're going to get and for the kind of public-private mix that in that institutional framework that makes up money. Money is an institution, it's a social institution that has a construct of norms and arrangements and forms and so forth, right? So it's a very complex social institution. And so I've always been interested in the money, in the history of money, and the history of money is basically a history of the money form. And what you see is that the dematerialization of money. And you see it especially well anchored in the international monetary system, right? Because you're going from two monies, bimetallic standards, right? The conflict between gold and silver that goes on for millennia, that gets decisively decided in favor of gold during the 19th century, starting with the Peel Act in Britain, 1844. And so then you have the period of gold, which is, let's say, from 1844 all the way to 1931. But in that period, you're already beginning to have so-called gold exchange standards, where you have a stronger mix of gold and paper, the paper being fiat currency, especially Britain. So the gold, what we call the classic gold standard from 1879 to 1914 was already a gold exchange standard, in as much as it had an inflow of gold from other countries into London, and then an outflow of sterlings from London or from the UK into other areas of the world economy, right? And so that was a double. All monetary systems are flows, and there's circuits in the double flow, centrifugally to the center and then centripetally to the center, centrifugally from the center. And so then you see gold exchange standards based on gold flows going this way and fiat currency flows going that way. And that is exactly how an international monetary system is very growth promoting, because it goes beyond the metallic barrier of the gold standard, right? You see then, you had this incredible problem during the interwar period of figuring out a new kind of gold exchange standard that was even more flexible, right? So there's this incredibly interesting history. It centers around the Genoa Convention, right? In 1922, trying to rebuild a gold standard, right? And you have also an incredible amount of theoretically important work being done on the purchasing power parity, on interest parity, all of, on exchange rates and how to make. There's this period, right, when we realize we have to have a different kind of international monetary system, and we're not able to set that up because the 1925-1931 gold standard that was set up collapsed at the first whiff. And when it collapsed, it was a strong whiff. The stock market crash of 29 was a strong whiff. But there was the international payment flows from Germany with reparations to England and France to the US that was threatened by the trade wars that the US started. So the system collapsed because the financial underpinning, the financial architecture of the system collapsed before. So, but that then created a huge banking crisis. And 9,000 American banks failed, right? So it's only in that kind of crisis that you actually rebuild from scratch, right? And that's the Bretton Woods system, right? And so the Bretton Woods system is a different type of gold exchange standard where gold basically can fade out gently. The dollar was overvalued against gold. The dollar was overvalued against other currencies, allowed also the other currencies to catch up. There were constantly more dollar outflows than gold inflows. And so there was already an elastic global money supply that we didn't have before. But the overvaluation of the dollar ultimately is what ruined it, and so it collapses, right? And it collapses exactly when those other countries like Germany and Japan catch up. And when it collapses, it triggers another crisis, stagflation crisis. That it anchors itself first with commodity price hikes that Bretton Woods had kept down, that explode when Bretton Woods collapses, right? So that's particularly the oil price explosion of October 1973. But so I'm trying to understand a pattern, right, where the international monetary system is a guiding force in this long wave, both for the upswing and the downswing. And so what I then ended up doing is to understand also this question of digital money, right? So because we're going from a dollar standard, which is basically a private bank money standard, to a digital money standard. And we're going to a digital money standard precisely because one of the important transformative elements of our economy, and which was dramatically accelerated, of course, by the pandemic, is the move to a digital economy. And the space in the digital economy is entirely different than the physical space of nature that we used to, right? And so we're going to get a different money form driving the digital economy. And we have cryptocurrencies, so that we can talk about cryptocurrencies forever. And I hope that maybe when I come to Unicamp in August, I will at least have one session on cryptocurrencies, because of course, young people are very fascinated by this. But this is not yet anything but a speculative financial asset with potential for being, a segmented payment system within a certain network framework on the internet, right? That's what it is now. But it is growing, and there's many different configurations. It's as technically dynamic and first come advantage innovation driven as the internet in general. And so you have stable coins, you have non-fungible tokens, you have the Etherspace, you have Bitcoins, and you have all these different network configurations because of the underlying technology of distributed ledgers and blockchains, right, which allow a radically different but very internet fit reorganization of networks without brokers. And so you have incredible amount of innovation there, but it's also an economy, a digital economy developing itself and trying to figure out how to become, an increasingly strong vector for economic activity of all kinds. And so you have that, but then you have, of course, and this is crucial, you have this evolution towards the CBDC, the central bank digital currency, right? The official digital money. And that has incredibly important implications for two things, at least. One is that you're going to have China go first, then the European Union, and only later the US. And it's this, the thing that the US is behind. And it's this two, the US is also behind in terms of the transition to a carbon neutral economy, right? And it's precisely because the US is behind those two things, behind the other blocs, that it loses its hegemonic status in the transition to a new accumulation regime, right? And so that is part of the end of the dollar standard, right? And part of the problem of being behind is that the US right now is in institutional and political chaos. And it doesn't have the coherence and consensus to basically make the necessary reforms that are conducive to putting in place that transition to a different accumulation regime. The other countries have, I mean, China and the European Union have that coherence. And they're also pushing a different variant of capitalism. Both of them have are uniquely different, uniquely distinct types of capitalism, right? You have a state-directed capitalism in China. You have a kind of a social market economy model in Europe. And then you still have this Anglo-Saxon neoliberal model in the US, and to some degree also the UK. It's not an accident the UK couldn't live in the European Union and needed to get dropped out. It's a different model of capitalism. So you have these three blocs also representing not only different variants of capitalism, but they're in different stages of the transition, and both vis-a-vis climate change as well as vis-a-vis digital money. And once you have digital money, you're going to change finance. It's going to have a pretty profound impact on the business model of banking in terms of fractional reserve banking that will become not necessarily obsolete, but quite different once you have digital currencies, regulating the money supply, right? So we are going to have a very profound change in the monetary regime. And it's also going to be a profound change in the monetary regime that creates distinctly different internet spheres for those power centers. And it's going to be also possible for that each one of their monetary regimes, the e-renminbi or e-yuan, the e-euro, and the e-dollar eventually, I don't even sure about that, they're going to be moving away from the dollar standard. They're going to have their own monetary and financial spheres, and so there's going to be a gradual acceleration of what has been already a long-term tendency of the dollar gradually, slowly becoming less important in terms of its market shares. You can measure the international monetary status of a currency with market shares on 6 different monetary functions, which I did in the beginning of the book in chapter 1, just to understand what it means to have world money. But those shares are declining for the dollar, have declined for the dollar, but very slowly. They may decline a little faster because of this creation of a new type of money coming with the official digital currencies of China, and then eventually also the European Union within the next 3 to 5 years. Right? And so that's going to be a very, very important part of the story, right? And it gets connected, once again, it gets connected to dramatic initiatives both in China as well as the European Union concerning their specific digital economy. Right? Basically the Chinese, especially in their recent moves, competition policy moves towards their own tech giants, right? Alibaba and Tencent and Baidu and JD.com, they're building a surveillance state, whatever that means. Right? But they definitely have a relationship to big data and a social vision of control, electronic control over people that lends itself to a very centralized system of dirigisme, as we say in French, of state directedness. Right? And the Europeans have just passed a remarkable law, the Digital Markets Act, and which complements the Digital Services Act, to build their own distinct internet economy, and they have a different privacy regime through the General Directive, the Privacy Directive, right? Which they forced the American techs to abide by. Right? So that's part of what's already going on in terms of the transition to a different accumulation regime. To speed this story up, in this slide, I already talked to you quite a bit about what I meant to say in the international monetary system in a long wave context. Right? Here are the four different systems that I already talked to you about briefly, right? The bimetallic standard, which then leads to the 1873 crisis, and then the depression 1873-79. Followed by the US-led classic gold standard starting in 1879, which is beautifully described, by the way, in its private dimension by Karl Polanyi in his fantastic book, The Great Transformation. Right? He has a chapter on what he called the haute finance, and that's basically that gold sterling standard with London as the financial commercial center of the world, but also England, of course, the British Empire being the dominant force, hegemon in the world economy. And then you have this whole period of the interwar period, starting with World War I, ending with the end of World War II. You have Bretton Woods, set up in the Bretton Woods Conference in July 1944, with the gold-backed dollar as the new world money form. That also works very well. Because, not least because the US transports capital abroad to facilitate the catching up process that was already anchored by the overvaluation of the dollar within that beginning of the gold standard. And so the other countries can catch up. But then when they catch up, there's the breakdown of Bretton Woods, triggers a financial crisis, a series of financial instability waves, and that's the stagflation crisis. And then you come out of that, again, with very brutal measures that save the dollar as world money, that tripling of the interest rate in October 79 in particular, but also then the Reagan reforms, which set up the neoliberal Washington consensus type capitalism that we've come used to from the US. It deregulates money and finance, and then it reduces taxes on speculative gains, and it adopts a policy of pumping lots of liquidity through the financial system into the real economy, but a lot of it stays in the financial system, which then becomes a very, very much more powerful force, launching asset bubbles. The US becomes a bubble economy that drives the world economy. And so that's a particular configuration that lasts till the great financial crisis. And so my conclusion from that is that I already told you that in the upswing of the long waves, when the accumulation regimes are set up and they work, the international monetary system is a driver of global expansion. It is a driver of globalization. When the crisis then happens that stop the upswing and start the downswing phase, the financial crisis that end this, that make the turn in the long wave, then the international monetary system turns itself on its head as an engine of instability, as an engine of monetary turmoil, financial instability, and secular stagflation with deflationary biases that ultimately end up in a second crisis. So in a long wave, you have two crises. You have the crisis, the periods are bookended by crisis, okay, at the beginning and the end. And in between, you have lots of turmoil, right? So I spend a lot of time in the book, in the Multipolar Capitalism book, 3 chapters in the middle, exploring how the dollar standard has been working in a destabilizing, centrifugally dominant, fragmenting mode that goes from quantitative easing waves as a kind of a monetary protectionism to trade wars with Trump, and then the innate mismanagement of the global pandemic that was already made worse because of the frictions and tensions and lack of coordination between those power sectors. And so that's a good part of the book, right? But we are now in a crucial moment. And I'm trying to kind of just sort of get to the key point, which is that we're in a transition. The second crisis that I talked to you about, which is typical for the downswing phase, possibly becoming sufficiently chaotic that it forces reforms that eventually can create conditions for a renewed accumulation regime and therefore a renewed upswing phase. We are right now in that transition. Right? To me, the global pandemic, besides being a stress test on societies and also creating dislocations of a new type of stagflation crisis, which I'm trying to understand right now, which I have lots of ideas, but not clear enough thinking yet. Besides that, the global pandemic is the beginning of a systemic environmental crisis, of which climate change is the most dramatic vector. Right? But we have built a capitalist system completely in violation of laws of nature, with the unintended consequences or intended consequences of destroying the natural habitat of our planet that we live in and draw resources from, right? And so basically nature is biting us back after being violated for centuries. And the pandemic, which is the fifth or sixth pandemic in a row, right? I mean, besides, SARS and MERS and the Zika mosquitoes and Ebola and the bird flu, these are all that we just mitigated enough not to have them as global pandemics. The sixth one hit us, but it also means that we're doing something to our environment in terms of animals and in terms of habitat destruction and in terms of meat consumption and what have you, that makes us much more susceptible to pandemics, besides this incredible bout of urbanization that we have gone through in the last 40 years. Right? And so we are doing something to nature that has reached its limits and is biting us back. And we're gonna have to organize capitalism in a much more sustainable way to be able to live with this, to be able to handle the pressures of the environment, the environmental degradation that we have unleashed. Right? This is an existential crisis. This is a systemic crisis. And one of the important things about the regulation theory framework that I follow is that there's an analysis of different types of crisis, okay, which I find underexplored in the theory, well worth pursuing more. And so, for example, the great financial crisis is a crisis of the mode of the regulation of that accumulation regime, because it was driven by a certain type of finance, and that had to be re-regulated with Basel III and the Dodd-Frank Act and other financial reforms act. And so that's not the same finance as we had before, but that's not a systemically enough big crisis to change the whole accumulation regime as this crisis is, right? This crisis is a crisis of the accumulation regime, right? And we have, that's when the long waves have to make their turns for the risk of our own self-destruction. And World War II was such a crisis. And so we're going to have to organize this. So we have this global governance mechanism through the Paris Agreement, and the countries are dealing with this for better or worse. It is what it is. But what's important here to understand is that we're going to go through a remaking of the infrastructure of capitalism. And there's hugely important ethical and distributional questions between certain regions, between rich countries having caused this problem and poor countries suffering the most from this problem. And within countries, because of environmental racism and the incredible unequal distribution of pain and destruction in different parts of the country. And so because it is so radically destabilizing and distributionally explosive, that we have a chance to have a much better type of capitalism, to rethink the whole idea of sustainable development. I want to point your attention to the UN Agenda of 2030 and the 17 Sustainable Development Goals, which give you kind of an idea of what we can strive for in remaking capitalism from the ground up. But we have this relatively chaotic situation where, you know, we have three different types of capitalism, three different power centers at different stages of making this transition work. Yes. And this is fascinating. So I've been looking at, and I'm looking more at, you know, the Chinese dual circulation strategy and common prosperity policies and how they've changed recently. And I'm looking at the EU and its next generation EU recovery fund and the Green Deal and the issue of a new type of Euro bond, no longer a national bond, but a Euro bond that is issued by the European Commission, basically, that will provide the safe asset that the Eurozone so far has missed to become a more fully established form of world money. And then the US. And I have to tell you, I live in New York. I see a lot of what's going on in the US, and we are in a very precarious state here, politically. And this is not going to play out easily, and it is not going to play out rapidly. So you have many years of intense conflict within the US ahead, and that's going to distract the US for a while, right? Now, of course, to finish my conversation, or my presentation, I should say, and giving you a chance for questions. The invasion of Ukraine by Russia is a game changer in precisely that moment, right, of the transition, because it kind of confuses the energy-based transition by creating short-term pressures to find alternatives to Russian gas and oil, which is very precarious for Europe. They depend a lot on that. And by at the same time raising the price of fossil fuels and therefore allowing later acceleration towards the renewable energy infrastructure that we need for a zero carbon economy. And so, but it also creates a much sharper polarization in the multipolar configuration, right? And between European Union and the US on the one side, and China on the other side, and Russia being an ally of China. And key to this is also the fact that has surprised me and many people, nobody expected this, the rapidity and the extreme strength of the Americans and the Europeans together to isolate Russia financially, and in particular to basically confiscate over half of Russia's official central bank reserves. That's an incredible step to have taken. It's a step that makes it clear to everybody that the dollar standard, if needed, can be weaponized for the pure power pursuit of the US. And that will make lots of other people think we need an alternative system, which the Chinese are actually building, right? You have the Chinese are building an alternative to the SWIFT offshore banking system, which is about now only less than a tenth of that system, okay? But it's a much more regulated and directed system. It's an officially guided system with offshore banking centers being created, both for dollars and renminbi, that are controlled by the Chinese central bank. But it's an alternative system, and the key to this is what is known as CIPS, the cross-border interbank payment system that's renminbi based, right? And so I'm looking at these institutional architecture games that are being set up here by the European Union and China, precisely to move into this multipolar economy in a transition to the zero carbon economy. Thank you.
Oh, thank you, Robert, for your presentation. Great presentation. I will open the floor for our colleagues that's in our Zoom, and then for our students who'd like to make some questions, the ones who are present here. Yeah, very shy, Robert. Would you like to? And then Bruno can start. Let's go.
Okay, so thanks a lot, Robert. It's always a great pleasure to see you, and I'm looking forward to meet you in person in August. I'm sure we'll have a lot to discuss. And thanks a lot for the brilliant presentation. And I have just a question related to you are claiming very interestingly that the digital currency will provoke a very important change in the payment system, the world payment system. But my question is, at the end of the day, the resilience of the US dollar comes also or mostly from its role as the reserve currency of the world economy, which is also related to the role of the public bond market of the US for the world economy. So I would ask you to elaborate a bit on this potential disruption role that the digital currencies, if you think or not, that it can have a disruptive role also on the role of the US dollar as the reserve currency of the world economy, and backed by or having the public bonds as an important tool, let's say. So this is my question.
Wow. Okay. Well, nobody has a public bond market like the US has. The EU with the new Eurobond is just beginning. The Chinese have a very huge bond market that they could and try to internationalize more. And they also have huge dollar reserves, which they're setting up in offshore centers for their own banking system to have convertibility between renminbi and China and dollars outside of their national space, but still part of their exchange and capital control system. They also have a leadership in green bonds, and green bonds are going to be very important. So if they build a renminbi market, green bonds, and they can internationalize it, which they're trying to do, they have a basis to create a new asset category that can be very attractive. It's not clear how their different models and structures of the digital currencies that the Europeans and the Chinese are going to put in place, how they will fit into their own domestic financial system, as well as into their global bond market presence that they have to have if they want to have a serious international presence as world money, right? Okay, but it's pretty interesting to watch this. Okay, at the same time, you have I wrote about this in the book, right? You have a terrifying moment of 5-6 days in late March 2020, at the beginning of the pandemic, when the American Treasury market got incredibly stressed and cracked. There's a flight of safety tendency that everybody in a panic runs to the dollar, right? And so dollar prices shoot up, dollar interest rates collapse. And then for some very strange reason, it turned sharply for a certain period of time, which was a flight from the dollar as safe haven to something else by hedge funds and by ETF funds. And they have become to play a much bigger role in the global organization of the US Treasuries market, because banks have been gradually, for 3 different reasons, moved out there. So this is a more fragile market, okay? And when the Americans, the Fed is now facing very high inflation rates, needs to accelerate its tightening moves, it will try to not only raise interest rates much faster, much higher than it had assumed to do, but it will start selling off lots of bonds that it accumulated. Remember, the Fed doubled in size in the last 3 years, when it already had quadrupled in size in the last 10 years before. So it went from $865 billion balance sheet to $9 trillion. Now it wants to go down. So it will it will throw a lot of shit into, a lot of bonds into the market. There is already a stressed market, okay? It will be precisely in that moment when we will see how good the Americans are institutionally to understand that they're in a floating transition of architectural arrangements of payment systems, that there's a new ball game going on that's multipolar. Does that give you a bit of a sense of where I'm thinking? Okay. Yes, Giuliano.
Hi, Professor Guttmann. How are you doing?
Call me Robert, please.
Okay, Robert. Okay, Robert. Congratulations for your presentation. And I have two questions. The first is not too early to enter the ends of the dollar standard? It's my first question. And my second question is, what's the possible implications of the monetary multipolarization for the emerging countries, in your opinion?
Yes.
Thanks so much.
So, look, the dollar is dominant. Yes, it's still more than half of the whole system, right? And it's not going to go away as a dominant force with the largest market shares. What is important for me to highlight, right, is that the rules of the game have changed, and they're changing. And they're changing because of a fragmentation process that has reached a certain critical mass, because of a new type of instability, post-pandemic stagflation, because of the fragmentation has highlighted political changes that have made for more sharply divided variants of capitalism, which is China, the US, the European Union, right? And that we now have a very urgent task, which is to get out of the pandemic and deal with climate change. And the US is far behind the others in dealing with this, and the US is far behind the others in dealing with this because it is politically in an intense crisis. That you don't understand unless you live here, okay? I'm sorry to say that. You cannot understand what the pandemic has done politically with Trump, and the mistake. I mean, we can talk about this a lot, but this is a crisis that has a long way to go, okay? And it's gonna get worse before it gets better. And this completely is distracting the country, right? I mean, the fact that Biden has done a good job, right, with dealing with Russia and Ukraine, and there has been clearly, they were good at this. The country doesn't care. There's no political benefit for him at all. Right? He goes down in the sondage, in the polls more and more. It has nothing to do with what he's doing. Okay. This is a situation where the normal political rules have been suspended, and so we're in a very chaotic situation. And people outside of the US do not understand it. They see this January 6th thing as a completely weird thing, right? But this is just the tip of an iceberg, right? And so, if you live here, you get pretty drawn into it, And I see it among my students, both sides, how tense it is. And you got 550 million guns in this country. So think about that. So, I'm just saying that the rules of the game have changed, and the hierarchical configurations of what people are doing and how they're thinking and what they're able to do consensually in terms of reforms has changed. Whatever you think of China, it has directive power. Whatever you think of the supranational governance chaos of the European Union, they do get their decisions made eventually. And now their ass is burning, literally because of Russia. And they usually, when their ass is burning, they do get it together, because they're marked by history of divisions that have killed them many times over. Right? But the US is like in its own ballgame, you know? It's like in its own ballgame. It's on a different planet. Yes. Fernanda.
Hi, Professor. Thank you for the presentation. Brilliant presentation. So I'd like to hear more from you, your thoughts about the differences. Okay, the difference between what we are heading now. Okay. I don't know. What you are heading now, the institutional framework from the 2008, then when you were talking about the cycles, the super cycles, the dot-com framework, institutional framework from your older book, especially about the international payment system and the private cryptocurrencies arising, especially considering the potential of smart contracts. And also, I'd like to hear a bit more from you about the impacts of CBDC and cryptocurrencies on credit. What do you think about it?
Right. That's crazy, yes. But look, I never answered Giuliano's question about emerging markets, which is extremely impolite for me. But I also have to say I got emotionally carried away a little, right? But I know that I talk to people from outside of the US, and they don't get the depth of the difficulties, you know, the fragility, the democratic fragility of the US, right? They don't get it. And I didn't get it until I saw it. It was a surprise. But, you know, you have a movement that is going to be an important political movement on the extreme right that now is abilifying itself to go far beyond just Trump and its dependence on Trump, right? So it's a movement that's looking for new leaders. It's a movement that's looking for strategy and policy, but it's a movement. It's a cultural movement, right? Of Middle America of sorts, you know. And they're opposed to a different type of America, which is, you know, urbanized, multicultural, and socially mobile upwards, right? And so there's a deep division. But the emerging markets, look, I think one of the things that's going to happen is that the emerging markets two things will happen, right? One is that in terms of their dependence on commodities, they will be part of this transition, right? From a fossil fuel-based economy to a digitalized, electrified, but increasingly nuanced on commodities. Right? Part of this is going to be natural. The whole struggle with nature is going to radically redo the idea of ecosystem services, ecological services, right? And so commodities are going to go into the direction of also providing supply chains and other forms of exploitation and so a lot of what emerging market economies will realize is their place in a more nature-based, sustainably development-oriented type of capitalism. And they can be incredibly important leaders conceptually in that struggle, because we're going to spend a lot of time trying to figure out how the world is going to look like when you know, 100 years from now, when temperature has risen 5 degrees Celsius, you know. And at the same time, what's their place in the digital economy? You know, what's their place with a smartphone-based youth? And what does that do to the entrepreneurial, local entrepreneurial capacities of those countries? And so, and then there's the problem of urbanization and regional development balances, right? So we'll know, I think we will clearly not talk about emerging market economies 5 years from now as a concept. I think we will have a different way of looking at different countries and their regional I think geography is going to become incredibly important because we're basically challenging geography right now. We're destroying rivers. We have glaciers melting. The sea level is rising. 80% of the people in the world live right close to the coast, yet sea levels are rising, right? 1.5 billion people in the world eat fish every day, yet fish are going to be gone, right? So we're going to, but we're moving towards this digitalized and sustainable development kind of paradigm.
Eu estou ligando, meu nome é Rosângela Balini, tá? Eu tenho Unimed Campinas e eu...
Just a moment.
I muted her, sorry.
Sorry for that. We are online.
Happens
can I just use the words just very, very, very
I have not even answered Fernando, but I'll get back to cryptocurrency.
I'm going to add something to Fernando's question. That's it. So
okay.
Just to add to Fernando's question, and then to present you a question that's from our audience on YouTube. So you presented us, we have now in mind this movement of the creation of CBDC. And you have seen that somehow 20 years ago. You saw the movement just more than 20 years ago.
Yes.
What we see now, so I'd like to make you two questions. First, do you think that there is a movement, a reaction of central banks to the creation of this private, I wouldn't say money, but these private assets? So because we see a huge movement of the central banks.
Yes.
And you have touched the idea that central banks, the digital money will change the international financial system. But what we see also, I'd like to hear from you, I think that Fernando's question goes on that sense, it will change also how the financial system works domestically.
Yes.
We are very worried about how it works and mainly about the role played by the credit on the work of capitalist economies. So I'd like to hear a little more from that. So just adding to Fernando's question, and then afterwards I will add a question from our YouTube audience, okay?
Yes. Yes, I don't have any answers to those questions, right? We're at the very, very beginning, in a way, right? If you think of this as a 50, 70-year-long process, right? In terms of monetary reform, right? Which is, I mean, monetary reforms take time, okay? There's a long history of that. And they have their own overshoot, experimentation. It's not a smooth process. And what is always extremely important is the precise private-public mix of finance as a social relational construct, right? And how it relates to the state and how it relates to the economy, I mean, industry or consumers or whatever, right? And putting money into the internet, right? And make it programmable with smart contracts and blockchains and where you have no more national boundaries, you have no more old style structural boundaries between financial institutions, non-bank financial institutions, bank and internet players, you know. You know that over a longish period of time, right, it will completely transform how we operate. I mean, it's not just a question of changing finance, it's just even a question of how we operate. You know, how we communicate, how we live, what we're doing, how we relate to space, you know, how we deal with data. And how we have to mix that with dealing with mitigation, adaptation of climate change. So, you know, I mean, look, so more specifically, you can go, and I can provide information if you want to, right? You can go to the IMF report, the BIS report, the Bank of England report, the Fed report, the PBOC, I mean, the People's Bank of China report on digital currencies. You can look at how Cambodia, right, and the Bahamas have already introduced it and what's happening there. You can do a number of things, right? You can look at also how cryptocurrencies have evolved, you know, and what does that mean, and what kind of payment systems do they need, and why are they diversifying so rapidly into weird speculative financial assets? Is that just the birth phase of this thing, or is it something that is actually part of the innate nature of private, non-bank electronic money, right? And so I have no clue, but I can see that there's change happening, and that it is profound, and that it is happening in a context of lots of pressures, which broadly speaking, you can call a crisis, an environmental systemic crisis. I can see that. And I can try to write about it and talk about it.
Fascinating. It's really,
Huh?
it's fascinating. Really, it's big, complex. And
Yes. But it's also, it's good work. We all need to do that, you know.
Yes, we are facing that.
We're facing.
Another question from the audience right
Sure,
now.
please.
It's about the person who asks is Paulo Rezende, and he asks if the dollar standards, he's going back to the discussion of dollar standards. If dollar standard is reaching its final phase, its weaponization against Russia shows that it's still strong, even if another crisis, financial crisis, is necessary for the replacement of its power, or the current crisis is dramatic enough to induce a full replacement of this standard within this generation. Going to the question of Julianus somehow.
It's probably neither nor, it's in between, right? So, I mean, one way to look at this, right, is to say that there is a global conflict between the dirigiste, the state-directed capitalism, and the Anglo-Saxon neoliberal capitalism. And that, again, as in the previous two world wars, the war started in Europe, and it hits Europe in a very sensitive spot, as always, precisely because Europe has this contradiction between its incredible energy dependence to Russia and its desire to be the first one to move into the zero carbon transition, right? And so you can look at this as a kind of a World War III situation, driven by a fascist leader who not only has the kind of, ambition of a Hitler, but who also has 6,000 nuclear missiles and a lot of chemical and biological weapons that he has used before under his belt. And, when you're talking about it from those terms, you're going to have cyber warfare, you're going to have financial warfare, you're going to have vaccine warfare, whatever you want, right? Knowing we're going to have more pandemics, right? You can use pandemics as a weapon. So if you enter this world from that angle, with that shock, you're gonna have very soon, very rapidly, you're gonna have both sides organizing themselves in that direction towards a confrontation. And there will be moments where the lead, it's going to just depend on a very few leaders, okay, unfortunately, right? But the leaders have to say to themselves, are we going to do this? Are we going to do this, or are we not going to do this? And if we're not going to do this, what are we going to do to contain and talk about our tensions? This may hopefully happen while Biden is still president, but it may happen when a crazy American leader is already a crazy American leader. There's plenty of candidates you know. So from that angle, the other countries are watching, you know, who do we go for, right? Including, I'm sure, Brazil beyond Bolsonaro. Yeah. I don't know whether I'm making sense, but to me, the invasion of Ukraine is an incredibly important moment in shaping this transition. Very dangerous moment. Anyway, so to go back to the question, right? It's not dollar still dominant, and it's not just a little thing. No, the dollar is going to stay dominant, okay? But what does domination mean? It's not domination, it's dominance. That means it's one of three monetary zones. Eventually, we're going to have three different monetary zones. How they're going to be relating to each other, whether they're going to be cooperating enough to the level of the SDR, the special drawing rights, becoming a more important central anchor of the future international monetary system when you have just one globe on fire. That's a different question. We're not at the end of the story. You know, there could be global governance structures that allow us to be peaceful. There could be global governance structures that allow us to be sustainable. There is going to be so much pressure to redistribute that you're going to have a progressive option politically. You know, but it has to also be one that understands the globe as it is, you know, and I hope the Brazilian left can figure this out, you know, all those Unicamp colleagues of mine, you know, because you're going to play an important role. The Brazilian left has a good chance to win eventually, and it's going to have to say something very important because it's sufficiently engaged but not neutral, right? In this moment, you know, whether it's in Latin America, in America, or whether it's in BRICS, it's a different. It has its grounding, and it has a role to play in this. Plus, you have the lungs of the world. You have the Amazon. You cannot let it get messed up like that. It's one of the 5 tipping points that will make all the difference to how climate crisis is going to unfold. And it's one that we're pretty close to tip. You know, so. But the dollar is still going to be there. It's just going to be in a different. There's going to be a different game. Anyway, what can I say?
Yes. I think we have a lot to discuss when we come here to continue.
Looking forward to that.
It's a lot happening. And
I'm very happy to see all of you there. It's beautiful.
Really nice to have you here.
Thank you.
So I think we don't have any other question. We'd like to put another thing, or can you end what you prefer, Robert? Can we?
Yes.
Can we end the session?
Yes, we can. Yes. Thank you for the invitation. I hope it made some sense.
You have a lot of things to think, and as you put in the first place, all together, you have a complex world. You are looking for a lot of things together and putting them on your reflections. It's great. It helps us to think. And it was a great pleasure to have you here once again. And we will have a little more of you on August various. Thank you very much.
Thank you. Bye-bye.
Bye-bye. Good
Bye-bye, Professor. Bye-bye. Thank you.